Ethereum price is thus deciding on its fate if it closes this week below that 55-day simple moving average, SMA. Although the 55-day SMA is not a clean element with perfect tests and rather is quite chopped up, it acts as a sandbox that slows any sprint to the upside. This fits the narrative when traders are looking for that Christmas rally, but it gets stalled each time as profit-taking happens too early and too quickly. Ethereum could start to see a fade to the downside as the US Federal Reserve has triggered a bit of a depressive mood as it crushed some aspirations for a steep Christmas rally to salvage what appears to be an almost lost year in returns. Ethereum risks dipping further towards $1,075, which is the low of November. Once that level breaks, for example, with next week's data points pointing to confirm that the US Federal Reserve has been saying to see a flirt with $1,000 as $883.60 is the only level nearby that could provide plenty of support to stop the dip. Upside surprise would be a simple weekly close above the 55-day SMA, around $1,350. That would position bulls between the vacuum space between the 55-day SMA and the 200-day SMA to the upside. That 200-day SMA is a force to be reckoned with as it already triggered twice in a row of firm rejection. Should traders ignore red lights from the central banks, expect to see price action piercing through $1,404 and tie up with gains around $1,688, bearing 35% towards the last 2 weeks of 2022.